Welcome to the SaaS Backwards Podcast, where we reverse engineer the success of fast-growing SaaS firms and explore strategies CMOs and CEOs are using to drive their businesses forward.
Welcome to SaaS Backwards, a podcast that helps SaaS CEOs and CMOs to accelerate growth and enhance profitability. Our guest today is Will Robinson, CEO of Encapture, an intelligent document processing platform that helps employees to stop wasting time on mundane and repetitive tasks so they can focus on better serving customers. Its customers includes banks, lenders, insurers, and companies with high volumes of paperwork. And Will, welcome to the SaaS Backwards Podcast.
Thanks for having me on, Ken. Glad to be here.
I'm excited to have you as our guest. And before we dig in, could you please tell our listeners a little more about your background and what Encapture does?
Yeah, that's a long answer, but Encapture briefly, as you mentioned, we are in the intelligent document processing space. So simply put, we have AI that can read documents and identify and extract important data out of those documents. We work mostly with banks, credit unions, lenders, and you can imagine the use case if you've ever bought a house before and you've applied for a mortgage through a lender. That loan officer is going to ask you for a copy of your driver's license, a recent pay stub, maybe a couple of years of tax returns, maybe some bank account statements as they try to better understand your financial profile. Maybe if you have a co-borrower, they need the same documents. So these banks are collecting documents from all over the place, trying to make a decision on whether or not they should give you a mortgage. Typically, there's a whole army of people in the back office that take those documents, manually enter data into systems, make sure that they have all the right documents in place, because a lot of this is regulatory driven. And where we come in is we automate most of that process. So as documents come to the bank, our AI can read the document, understand if it's looking at a pay stub or a driver's license or a bank statement, and then it can pull the important information off those documents, put them in other systems so that the bank can be a lot more efficient and process your loan a lot faster. So we work with banks big and small. Typically, anybody that's doing a fair amount of loan volume has a lot of pain around this, and they're typically trying to solve it by hiring more people in the back office, which is really hard to do. It's expensive. Finding good qualified people who know these loan processes and know these regulations, it is a difficult task. And then they don't want to be spending time all day, every day doing manual data entry and doing stare and compare type work. So we can really alleviate some of the more mundane tasks and allow them to focus on better serving their customers.
The problem agreement thing is sometimes really elusive for software as a service companies. Sounds like that's not an issue here.
Yeah, it's been really interesting. I joke with our team, nobody buys our software because it looks cool. That's because when it's working well, you don't see anything. It's sitting in the background, just sucking documents in and pushing data out. And so much of our sales process is business case driven. Our account execs, really, their process is building the business case on behalf of that prospect. And the demo is simple. It's usually a 1 or 2 time demo. It's a 5-minute demo. And it all comes down to understanding how this fits in an existing workflow and what sort of time on task it can save.
I want to make sure we talk about the ICP here and sort of define that and how these customers buy. Because this is while you've made it sound simple, it's really not.
It's incredibly complicated, and selling into banks and financial institutions is probably one of the hardest industries to sell into, at least that I've sold into. They are notoriously, say, traditional in their thinking, very conservative institutions. Embracing change is hard. A lot of banks have been around for 100 years, 150 years, and they've done things a certain way for a long time. And so when you show up and you start using buzzwords like AI or machine learning, we used to not even say that. We kind of stayed away from it. We just talked about how we were an automation platform. But then with all the ChatGPT stuff over the last year and a half, people are more comfortable exploring AI and they know they need to use AI in the bank. So now we can actually talk more openly about our technology. So there's very much some cultural challenges selling into financial institutions. On top of that, the decision-making process at a bank is fragmented. So, we sell into the line of business, not into IT. We try to sell to the person that has P&L responsibility. So someone who runs the mortgage banking group or the commercial lending group, or maybe someone who even runs loan operations, where they are responsible for the team and the cost and the speed of kind of processing loans. Typically, our buyer and our champion through the process is not our user group. And so we have this dynamic where we are engaging with kind of senior level folks at a bank. They're making decisions. They buy through committees. So there are multiple committees. There's a lot of decision makers that have to be influenced through this process. But then once they say go, we get handed off to a project management office or maybe a functional working group of folks that were probably not very involved in the process. And they may be quite resistant to change because they hear what we do and they first think, well, this is going to take away my job, or I don't understand, this is very intimidating, so maybe I'm going to push back. So I wish I could tell you and say we had it all figured out at this point. But I think what we try to do is just find the obstacles and say, okay, how can we overcome these? How can we change our process or our messaging to make this a smoother experience for all parties?
What's the duration of this sales cycle usually?
Yeah, that's a good question. If you're not being proactive and you're being reactive in the sales process, it will easily be a year to over a year. And that's typically because a bank kind of left to their own devices will just put you into a budgeting cycle, usually happens in the fall. And so you'll prospect in, you'll find your ICP, maybe there's even through your discovery, you identify that there's real need here. And then kind of the first response is, great, we have our budgeting cycle. Our budgeting planning starts in 4 months. We'll get you slotted in for that. And then, the next calendar year is when we'll actually get going on this. And so we have to work really hard to break that. There's several ways we do that. One is we kind of work backwards from a timeline perspective and saying, okay, when do you want the software up and running? And then we kind of work backwards from there and show them, hey, if you guys want any chance of going live with this and getting real benefit, we need to get going on it now.
Probably like a financial benefit, right?
It's always a financial benefit for them. Like they need fewer people, or there's some sort of risk benefit. So banks, they get audited by regulators on making sure that the data they're reporting about the loans that they're making is accurate. And there's a lot of fair lending laws around that. So banks are responsible for making sure that the data they have is clean and well maintained. And so we help with that. And so there's a risk mitigation play in this as well.
If we want in-year financial benefit, or we want the full year financial benefit, we can bring the decision-making in to a more current time frame. And I think that's a really important skill for a sales organization to build, especially when you're selling a year to 18-month sales cycle. Otherwise, as a younger company, that can be like, that's a double whammy, right? Complicated enterprise sale takes up a lot of your own energy, your available time, and then you have to wait. So
yeah. So to your point, finding those hooks where, so for us, that data quality and that data reporting, that typically happens once a year on behalf of a bank. There's a big kind of lead up to it. And so when we can identify that at the bank, we can work backwards from that deadline. And a lot of times they realize, hey, I have to get going now. And so that's how we've got our sales cycles in kind of to a 3 to 9 month sales cycle. The other thing too, that has worked for us, selling to banks 2 years ago or 3 years ago when interest rates were really low, a lot of people were refinancing their homes or buying new vehicles. That was a lot easier because there was a lot more pain. There was a lot more money. Banks were healthier. Now, interest rates are higher. Fewer people are looking for loans. It's just a harder time to be a bank. And so we've had to find ways to say, where are budgets available? Where are wallets open? And the compliance side for us, some of this data reporting I mentioned, has been really nice. It's something where a bank's willing to spend money. There's typically some, if someone says they don't have budget, I would always try to push back on that as a salesperson or as a founder. There's always some discretionary budget somewhere. It's just a matter of identifying how much that budget is, what it takes to access it, and where your product fits into their priority set. And if you can line up with that, there will be budget for your product. It may not be everything you want, but if you can kind of maybe reduce the scope of what you're going to do that fits in the budget, it allows you to get in as a vendor, allows you to establish credibility, and then you can upsell additional functionality or use cases once you're in. And we have found that to be a lot easier. Once you're in the bank, it's a lot easier to find ways to work with a bank, to work across the bank. You better understand the buying process, the decision-making process, their budgeting process, and you can kind of just align yourself with that. But getting in is the hard spot that we focus a lot of time on.
A long time ago, I was a technology exec at Citi, and for sure, the people that are building stuff out are sharing what's working for them. There's plenty of informal networking inside these organizations as well.
Yeah, and banks are unique. I would assume other organizations, other industries have this, but banks all have, besides sharing internally what's working, across teams, they are also in these peer network groups where they will get together periodically, now mostly via Zoom, but sometimes in person with other banks, similar size, maybe different geographic markets. And they will just share everything. It's very unusual, everything that's working, that's not working. So that has been a really nice referral spot for us, because you can build a champion at a bank and then they go to their peer network and they say, hey, we've got this cool new vendor called Encapture. This is what they're doing for us. And everyone else, that social proof is huge in the banking space. They want to know if their peers are using you, and they're very hesitant to work with you unless you can show exactly what you've done for one of their peers. And they're not as competitive as you would imagine them to be. They cooperate a lot in the industry.
Absolutely. That was my experience going way back. Before we move on, I just want to frame the scale of this opportunity for people. They may not understand how big the market is for your kind of solution. What is the state of automation at banks and lenders and other firms that you target?
There's still tremendous opportunity. We noticed that, and again, this is the banking space. I would imagine other industries are like this, but especially if you're in a heavily regulated industry, there's so much concern within the bank around getting things right and being complete in your process that typically they will over-engineer their processes and they will double up on work being done. And so, for example, if you go look at a loan process, like a mortgage loan process at a bank, there are like 6 or 7 people throughout that entire process, from you as the borrower first showing up and applying for the loan all the way to closing out that loan. There are 6 or 7 different people across the process that look at and enter data from the same documents. And it's incredibly inefficient. But they're doing this because they need kind of checks and balances and fail-safes on what they're doing because of the regulations. And so what we found is if we can kind of bring the right people together in the bank and help them rethink processes where we can introduce automation, there's tremendous efficiency gains that these banks can have. Now, you have to get them to buy into that. That's a whole different art. But I would say across most industries, automation is in early innings. Most industries have a CRM or a system of record where you store the data. In our world, it's the loan origination system where you store all your loan data. But automating the workflows in and around that haven't really taken off yet. And I do believe with AI, there's tremendous opportunity to take these databases and wrap some automation around it to make people's lives a lot easier.
Makes a lot of sense. Let's transition a little bit here. Your path to CEO of this firm it's interesting and I think a little unusual, maybe not unique as like a set of one, but it's a little unusual. So can you kind of share with us how you and your PE backer came together, which, it's a life goal for lots of SaaS execs, to become part of an ecosystem around a PE or venture capital firm, and how you made the decision to buy Encapture.
Yeah, I say it's a unique story. Most businesses have kind of unique backstories and backgrounds. So I've been doing this 5 years as a CEO here. And early on, I always felt a little behind the 8 ball when I would hear about people who just started a business, from their dorm room or their apartment or spun something out. It always sounded so clean and so inspiring. Our story is a little bit different. So my background, I have a finance background. I started my career in banking and private equity, and I worked with software companies, invested in them, and really fell in love with the industry. I've always been kind of an entrepreneur and operator type. I've always wanted to run and build a business. And so coming out of the finance world, I went and worked at a much larger technology company for 3 years and had the opportunity to lead a division and build out a division of that business that gave me a lot of confidence in my ability to run a business. But I also realized that I was not a startup guy at the time. I liked being part of something that was existing and seeing how can we build upon the foundation that the business already had and grow from there. So I wanted to go out and run a business. I loved software. That had been my background, and I needed a capital partner to do that. So thankfully, through my network, I knew these guys at Altruist Capital, who I work with now, and kind of shared my background and vision for buying and growing a technology company, a software business. They were excited about that. And so I worked with them for about a year, just sourcing a business to buy. And much like a BDR, a lot of outbound marketing, a lot of cold calling, a lot of conferences, had some specific kind of parameters around the type and size of business we wanted to buy, but it took me about a year to find this company. Thankfully, the business was local. I was already in Dallas and my family was here, and the business was based here. And so the private equity firm invested in the business about 5 years ago. I took over as CEO from the original founder who had founded the company 20 years prior. Since then, we've been on a really big journey of change. The company that we were 5 years ago is not who we are now in terms of what we do and who we are and our people and our team and our culture. It's a very different place. So some people sometimes ask, did you found the business? And the short answer is no. But some days it does feel like everything's different.
No, but maybe yes.
No, but maybe yes. Yeah. I do feel like, I will say this too, 5 or 6 years ago, like I said, I would not have felt confident doing a startup. I think now, if I had to do a startup tomorrow, I would feel a lot more confident doing that, going through the growing pains and the changes that we've made here, because you have to figure out pretty much everything. So, it's a journey. It's a journey. And it's been very rewarding. It's been fun. It's been fun to kind of see the transformation of our company to doing what we're doing today. But it's been difficult. And, there's definitely some sleepless nights involved.
I think we should dig in there a little bit. As you described it, it was really much a professional services firm with its own and other software kit that it would implement for customers, right? And now you're really a SaaS. So there are a lot of leaders out there that find themselves in that situation. They're accidental software entrepreneurs. I have one of those as a client, where he was a professional services guy who bought a company and, now he's got that to wrestle with. But how did you make that transition from professional services with Kit to, really being a true SaaS at this point? And where are you going from here?
Yeah, a lot of blood, sweat, and tears, candidly. It's really hard to do. I think looking back, if I knew everything I know now, would I do it again? I don't know. I'm thankful we did it and it's turned out well, but man, it was a journey. For me, the first thing I really focused on was culture and vision. Like, who do we want to be as a company? And that kind of has two sides to it. One is like, where are we going strategically? What do we want to sell? Who do we want to sell to? What problem do we want to solve? How do we want to go solve it? But then the other side of that was culturally, what types of people do we want at the organization? What are their values? What are our collective core values as a team? When we go hire somebody new, what are we looking for? And so thankfully, I felt like I had been able to figure that culture part out in terms of what I wanted in our company before I even got here, based on some previous experiences. And then it was kind of the X's and O's and figuring out, okay, we've got this professional services business right now. Is this the future? It was about 6 or 9 months of me being here before I realized that this was definitely not the future for several reasons, and that we were going to go kind of all in on being a SaaS business. And, I would love to tell you that I was able to rally the existing employee base and get everybody excited and make that a successful transition with the folks we had. Candidly, I had to replace almost everybody through the process. Some of them were involuntary, where they just weren't the right fit for our company going forward, either culturally or performance-wise. Some left on their own because they didn't want to be part of where we were going. It was too different from what they had done in the past. And then I had a few folks, and these were the hardest, people that were probably capable of being part of the new organization and the new vision. They, for whatever reason, didn't want to do it, or they didn't feel like it was going to be successful. And so, people vote with their feet. I will say to other folks I talk to who are trying to do the same thing, it will go faster if you bring in fresh people who know the space, know the industry. I'll give you a good example. I brought in a new head of sales about a year in who came from, a software background only. And I was telling him about the business. And I said, hey, look, we're in the middle of this big transition. I still do a lot of this professional services stuff. I don't even want you to learn it. You don't even need to know about it. Like, all you need to know is you're starting at this very early stage software business. And here are the resources you have. And here's our product. And here's what we're going after. And help me build this out. And so some clarity of vision and focus was really helpful, because then he was able to build out the revenue team, again, with kind of just a primary focus on software. We did have a handful of folks who've stuck around and done a great job, but by and large, it's a whole new team, whole new culture, and we had to do a reset to probably make it.
Professional services, I imagine, was a fair amount of revenue of the overall firm, right? As you were running.
Yeah, I mean, it was the majority revenue. We had a little bit of software revenue, but it was the majority revenue. And so that was an interesting conversation with my board and my PE investors, which was saying, hey, look, we're gonna kill off most of the business in order to grow, a very small part of the business. And it didn't happen overnight. It took like 3.5 years, candidly. We didn't do that. We were intentional about the transition, but it wasn't a very quick transition. We still kept some of that work around because it was high margin. It was our cash cow. And we used that to reinvest in the business, which allowed us to be a lot more efficient from a capital perspective. We definitely certainly had like specific kind of checkpoints along the way. Like, hey, can we prove this out? Can we prove out that there's a buyer for our software? Can we prove out that we can do this repeatably? Can we prove out that we can have SaaS gross margins? And so we had these checkpoints along the way that I knew if we hit them, we could keep going. And if not, we would, maybe have a different strategy.
And was the software that you had at the beginning what the foundation of what you have now, or did you develop new stuff?
What we have now, I would say 20% of it existed at the beginning. We had kind of the original concept of the product and we had some functionality. We invested a ton in it and we continue to invest a lot in the software, add in a ton of capabilities. It didn't really have the AI component to it 5 years ago that we have now. That was a big add. It's also hard too, because we started with a product that what we do with it now is not really what it was designed to do when it was built, I guess starting 15 years ago. And so when I showed up with it 5 years ago, it was still not where we wanted it to be. So we've got some technical debt that we have to live with because of that. And again, the easier path probably would have been just to start fresh and maybe do a big re-platform or rebuild of the software. I didn't feel like we had that luxury either in time or, we already had some paying customers on it. We knew what we wanted to do with it. I thought we could build around it. So there's always that wrestling of like, do you just need to blow something up and start fresh, or can you build on what you have? And I think it's different for different organizations.
You talked about a lot of change in the organization, and I want to just shine a spotlight a little bit on the sales team and what that looks like now, and how it looks today and how it's changed. So if you could just talk a little bit about what it takes to be successful selling a somewhat innovative product into a conservative environment with an enterprise sales team.
Yeah, I feel like it's a moving target because a lot of how we've invested in sales is based on kind of what the overall broader market wants. If you go back like 3 or 4 years, I would say the broader market wanted software companies to grow as fast as you can and spend money and just like grow. Top line revenue growth was the focus. And, the kind of the BDR, SDR, heavy outbound kind of flavor was where we started with this. We had, 4 or 5 BDRs. Again, our buyer universe, our ICP, it's a fairly targeted list. There's like only 3,000 or 4,000 financial institutions that we would go work with. It was very heavy outbound, had some ABM in there as well, but targeted. And the BDRs would qualify. And then our account execs would come in once a lead was qualified and kind of continue the conversation. I think as we've become more efficient, as our AEs have become more mature in our industry, as we've gotten smarter on how this works, we've moved to a more full stack model where our reps, there's still very much a strong kind of marketing function. We have 1 or 2 kind of BDR folks still around, but we've got 4 reps who are kind of full stack. And so they're doing prospecting and they're kind of taking the deal from prospecting all the way to close. It works well for us because our sale is, it's a consultative sale. It's not transactional. It's, it's an enterprise selling motion. As much as we like to kind of try to keep these solutions repeatable from customer to customer, every bank's a little bit different. Every bank has their unique requirements. And so at the price point that we sell this at, which is in, the high 5 to the mid 6-figure ACVs, like you can have a high touch model and that works. So that's our setup now. We've got a couple of sales engineers. We've got a great marketing gal. She's an all-star, jack of all trades, does a lot for us. And, we could talk more about this, but I would say the outbound motion, it works well for us. And surprisingly, the event-driven marketing has been really successful for us.
Yeah, I wanted to talk with you next about targeting prospects. How is marketing really moving people into a buying motion? What does that look like for Encapture?
A big thing for us is being able to get to the ICP. And what we have found in our industry is they love to go to conferences. There are tons of banking conferences, lending conferences. There's big conferences, there's little conferences. There are specific conferences to mortgage people and commercial lenders and compliance people and chief risk officers. And everybody has their little event and conference. And so we've been able to kind of map out that landscape. We've tried most every one of them. Some of them have not been very successful, but we have found the right mix of events where we can have a strong presence. Our ICP will be there in great numbers, And we do a really heavy kind of outbound blitz ahead of the conference against, we get the list of attendees, et cetera. And then we can go after them pretty hard about meeting up in person. So really going into the event, we try to have 20, 30, 40 kind of conversations lined up for the event. And then when we're there, we're constantly meeting with our folks, doing demos, kind of qualifying the leads that coming out of this, we have, an actionable pipeline. So that's worked really well for us. And it's a little bit different than kind of what the super sexy latest and greatest marketing strategies may say, but it's effective for our community and our ICP. And we've been able to do it fairly cost effectively too, which is important.
Is there anything else in marketing that really stands tall in terms of helping create deal flow for you?
The other surprise for us has been the referrals through peer groups. We've tried to figure out how we can help influence that. Really, the best thing you can do for that is just do a good job for your customer and turn them into a promoter of your brand and of your product. We talk a lot about the best marketing we can do is treating our customers well and making sure they get their solution up and running quickly. So that's been a kind of a nice surprise. Our digital marketing presence has been pretty light. We try to make sure we have a presence where we need to, online, LinkedIn. But again, our ICP, and there's not, they're not on TikTok. They're not, and so we don't need to be there. So we figured out a few little hacks that have worked well for us.
That's awesome. Hey, I think a great place to land our episode, we wove it in just so little bit, was just talking about AI. And I feel like we should talk about the value of AI for the product itself and how you've started to exercise that in messaging. Because you mentioned that it was sort of behind the curtain at the outset, and now it's become more important. So how are you guys using that to open sales conversations?
I would say we don't use it to open the sales conversation. We use AI almost as just like a messaging hook because it does get people's attention. And because we use AI, we've been using it for several years. We've got proven use cases. The best thing that we have done with AI is it allows us to be kind of thought leaders and experts in our industry on how banks should use AI. Because that's the question in every industry right now is AI seems super promising. How do I use it? And I can't tell you how many conferences I've gone to in the banking space where they have a panel on this. And I have yet to hear like concrete specific use cases outside of kind of what we're pushing. And what we're pushing and what we hope with is it's not sexy. It's not going to fundamentally disrupt the banking industry. It's just we're solving a problem and we're doing it more efficiently than if people did it manually. And we kind of focus on that. We kind of keep it, a meat and potatoes type message. So it allows us to go speak and be industry experts at these different events. Other than that, the only other time it really comes up is when we're doing like vendor due diligence and info security with banks and they hear AI and then they ask a bunch of other questions to make sure we're not being biased or we're not going to, again, run afoul of any sort of regulations that they have around treating people fairly and lending fairly, which thankfully we don't really play in that. So the AI is more the how, it's not the why or the what. And so we don't overemphasize it. We focus more on the actual problem we're solving and that we can solve it efficiently. And that typically gets us the win.
Yeah, I'd say that making something esoteric sounding be very pragmatic and usable probably works well with this audience. They want a little bit of their cake and eat it too, right? So they get to say they're doing something leading edge and they solve a problem that's, every day causing them pain.
Yeah, and I would just say that would be my encouragement to other SaaS leaders as well. In your messaging, speak plainly, speak simply. Don't assume that your buyer is as sophisticated about your technology as you are. Assume they don't know anything and assume that they may be intimidated by you and by your technology. And I think just the more plain and simple and crisp your messaging can be, one, it's actually hard to do that. It's really hard to do that. And so it will force you to get very intentional about how you talk about your company and your product. But it also makes you a lot more relatable to the buyer and it builds trust because they believe that you're there to really help them and care about helping them understand how you can solve their problems. That's something that we've taken away in our space that I think works everywhere.
Yeah, I have to say that messaging clarity, probably job one for, half the SaaS firms we encounter where they're just not speaking clearly enough about what they do, who it's for, the problem solved. Why would you engage? And I agree, the what and the how are a lot less important. If people want to learn more about your firm or be in touch with you, how can they do that, Will?
Yeah, find us online, Encapture.com. That's Encapture.com. And you can find us on LinkedIn as well.
It's great. Really appreciate your being on the podcast. It was a great episode. And if you haven't subscribed to the SaaS Backwards podcast, you can do so wherever podcasts are distributed. If you want more information about our demand generation agency for SaaS, we're at bostonlawrence.com. with a W, austinlawrence.com. And I'm on LinkedIn /in/Ken Lempin. Hey, Will Robinson, thanks so much for being here on the SaaS Backwards podcast.
Thank you, Ken. Really appreciate it.
Thanks for listening to the SaaS Backwards podcast, brought to you by Austin Lawrence Group. We're a growth marketing agency that helps SaaS firms reduce churn, accelerate sales, and generate demand. Learn more about us at www.austinlawrence.com. You can email Ken Lempit at kl@austinlawrence.com about any SaaS marketing or customer retention subject. We hope you'll subscribe, and thanks again for listening.